Welcome to Partner Technical Services Product Release Training. The Microsoft Dynamics AX 2012 Financial Management New Features Accounts Receivable course will be presented by Senior Support Engineer Jeremy Tandeschi and Senior Support Engineer Helge Arntzen. This course only covers new features, so knowledge of previous versions of Microsoft Dynamics AX is a prerequisite. This course was developed based on beta versions of Microsoft Dynamics AX 2012, so there may be some slight differences in the release product. Now let me introduce Jeremy Tandeschi.
Hi, this is Jeremy Tandeschi, a Senior Support Engineer with the Microsoft Dynamics AX support team. Today we're going to be taking a look at Microsoft Dynamics AX 2012 Financials New Features Interest Calculation. In this module we're going to learn about the new interest calculation features with Microsoft Dynamics AX 2012. The first lesson we're going to take a look at is enhanced interest calculation functionality. In Microsoft Dynamics AX 2012, we have the ability to do a single rate calculation or a multiple rate calculation. This will be explained when we take a look at the interest form and how we set these up, and we'll show an example of the difference of the two. We can also calculate based on day versus calendar day. We can calculate fee only. We can calculate different interest per transaction, and we can calculate interest for debit and credit balances. When we look in Microsoft Dynamics AX 2012, we'll find the interest setup under Accounts Receivable, Setup, Collections, Interest. Here's where we'll set up our different interest codes. First off, let's take a look at 15-day 4% interest code that's set up. This is a 4% interest code, and this is a monthly percentage. So one thing to keep in mind, we're calculating this based every 15 days. The percentage that we enter here is a monthly percentage, but since we're calculating it every 15 days, we're going to calculate 2% in every 15-day increment. But the monthly interest rate is 4%. We have the ability, as I said earlier, to calculate a single rate versus a multiple rate. If we wanted to calculate interest quarterly, we could enter a multiple rate, and then we'd set up different versions of this interest code. For example, from 1/1 to 3/31, we could calculate 1% of interest. In quarter 2, from 4/1 to 6/30, we could calculate 2% interest, and so on and so forth throughout the year. That would be an example of using a multiple rate interest code. As I stated earlier, we also have the ability to do it by day, month, or calendar day. Month, we'll calculate it every month. Here we've had it set up to calculate every 15 days with a 4% monthly interest rate. So we'll calculate 4% monthly, and we're calculating it every 15 days, so it'll be 2% every 15 days. If we calculated it based on calendar day, it would calculate it much more granularly. So for each period or each month, it would take our interest rate divided by the number of days and get to a more granular daily rate of interest. We can calculate interest by amount or days or month ranges. An example of an amount range would be if we wanted to calculate 1% interest from anything outstanding from 0 to $499. From 500 to 999, we want to calculate a 2% interest. And then from anything over 1,000, we want to calculate 3% interest. We do interest by amount ranges. You'll notice in the bottom half of the form, we can also calculate minimum and maximum interest amounts. The amount that you enter in the minimum interest amount is the minimum amount of interest that's going to be calculated per transaction. So for example, if we said $1 is the minimum interest amount that we wanted to charge, if AX goes through and calculates interest and it comes out to be 50 cents of interest, we're going to actually charge $1 instead of 50 cents because the minimum that we said we're going to charge is $1. The maximum interest amount is the maximum amount of interest that will be calculated. So once interest meets or exceeds this amount, we won't charge any more interest. If we say the maximum amount of interest we're going to charge is $100, if we have enough outstanding that it actually calculates to be $200, we're still going to only charge $100 of interest. The charge customer when interest exceeds option. This is how a user cannot send out interest notes until interest exceeds this amount. So for example, if we don't even want to send out interest notes until a customer has at least $10 of interest, we'll enter $10 in this field. If we calculate interest and it comes up to $6, we're not even going to create or send out an interest note. We can also add fees to our interest. We'll enter our fee account. Once a fee account is entered, I'll just grab a quick account here. Once that fee account is entered, we can also enter a fee that'll be charged each time we charge this customer interest. The second lesson we're going to take a look at is interest code setup. Again, we can set up single rates or multiple rates. What we'll first do is we'll set up a simple single rate example, and we'll go through a transaction and calculate interest. We'll also then afterwards go through a multiple rate example to show how that calculates. Again, interest percentage that we enter is a monthly percentage, but we can specify how often we're going to calculate interest. In the example I showed earlier, we had a 4% monthly interest, but we're going to calculate interest every 15 days. So it'll calculate 2% every 15 days. We can calculate interest by amount ranges. We can do amounts versus percentages. And we also have that charge customer when interest exceeds setting. So the interest amount must equal or exceed that amount in order to send interest notes. What we're going to do now is we'll create a new interest code, and we'll call this 15 days 2%. This will be a single interest type. Notice by default today's date will show up for the effective date, and there is no expiration date. We can enter that if we want this rate to be valid for a certain time period. We're going to calculate our interest every 15 days. And we need to enter our posting account to be hit with our interest. We're not going to do interest by range. We'll do a simple example just using a simple single rate. And our percentage, our monthly interest percentage, is 2%. Because our monthly interest rate is 2% and we're calculating interest every 15 days, every 15-day period that a document is overdue or an invoice is overdue, we'll calculate 1% of interest. I'm going to go ahead and close this form. What we'll do next is create a new customer. So we'll work with a fresh customer with no transactions. So 902314. Assign that to a customer group. I'm going to save and open this customer record so we can see a little more detail. So this customer has terms of payment net 30. So invoices entered will be due in 30 days. What we also then need to do is in accounts receivable, setup. What we now need to do is we'll close the customer form, and we need to go back to accounts receivable, setup, customer posting profiles, and for our general posting profile, we need to add a record so this customer has our interest code that we set up. So I'm going to add a record, and we'll do it specifically for customer 902314. We'll enter our accounts. And for our interest code, we'll choose the new interest code that we created. 15 days, 2%. Close this form, and we will now go to free text invoices, and we'll enter a free text invoice for this customer. So customer 902314. And we're going to choose the date of 5/1. So this is on 5/1. It'll be due in 30 days. So at the end of the month, at the end of May, invoice 1 for $1,000. We'll go ahead and post this invoice. And now today is 6/8. So that invoice is overdue. We're going to go back to the accounts receivable area page. We'll go to the periodic section, collections, and interest calculation. Here we're going to mark the parameters that we want to calculate interest on. So what types of documents do we want to calculate interest on? We'll enter the dates. So we're going to run it from the 1st of May until today's date. And I'm going to go into my select criteria and choose that specific customer. So we'll just run it for the one customer. We'll click OK. We will now go and calculate interest for this customer. To do that, we go to Accounts Receivable, Periodic, Collections, Interest Calculation. Here we choose the parameters or the types of transactions we want to calculate interest on. What we'll just do is we'll enter the date, so we're going to calculate anything up to today's date. We can choose to run it for all customers by removing this select criteria, or in this example we'll just run it for one customer. And we can click OK, and we can see that an interest note has been created. To see that interest note, we'll now go to Accounts Receivable, Periodic, Collections, Interest Note. And here we can see that there was an interest note created. If we click on the General tab, we can see a lot of information behind that. We can see the interest note, the end date, the customer. And if we click on the Transactions tab, here we can see that it was $1,000 was the origin or the invoice that we ran the interest note against, and we calculated $10 worth of interest. Again, if we remember, our percentage was 2%, but it was 2% monthly, and we were running it every 15 days. At the bottom of the form, you can see this falls into the 15-day bucket. So the description is interest value of 2% per 15 days, which results in a calculation of $10 or 1%. We can only have one unposted interest note per customer. So if we don't do anything else with this, we don't post and print that interest note, and we go ahead and run another interest calculation and keep the same criteria and choose OK, you'll see that it creates a new interest note and it cancels the previous interest note. So if we go and close this form and go back to look at the interest note, here we can see that we've had the first one that was created and is now canceled, and now we have interest note 1013 that is created. The next step would be to print and post the interest note. The next step, which we already actually got started with a little bit, was learning how to calculate interest. We can calculate for all customers, and we can calculate for one customer by either going to that customer record or by selecting that customer in the interest calculation form. So we'll go through some more examples. In the last example we did, the customer that we used was set up with the interest code of 15 days, 2%, so a 2% monthly rate calculated every 15 days. And we ran the interest calculation in that first 15-day bucket, which calculated a 1% interest or $10 out of a $1,000 invoice. What we'll now do is expand on that, and we're going to go to our interest calculation, and we're going to run it to the end of the month, so 6/31 of 2011. And we're going to run it specifically for that customer again. We'll click OK. I did not post or print my interest note, so it canceled the previous interest note and it creates a new one. To go view that, I'm going to click on the interest note. Here's my latest that was created, and when I click on transactions, we can see that 2% was calculated, or $20. And if we look at the bottom of the form, it now falls into the 30-day bucket. So we're going to go ahead and print this interest note. So here we've got our interest note that we would send to our customer. And now we're going to go ahead and post our interest note. And we'll post that at the end of the month. So now once that interest note has been printed, we're going to go ahead and we'll post that interest note at the end of the month. So once this interest note has been printed, we can now post our interest note. The next example that I want to do is to talk about the multiple interest rate functionality. If we go under Accounts Receivable, Setup, Collections, Interest. By default, when we come into this form, we're going to see in the upper left-hand part of the form our current records. We can click this and we can display all records. So if we're using multiple interest rates, let's go back to display current and we'll create a multiple interest rate and we can see how those will show. So for example, we set up multiple interest rates to calculate quarterly interest rate. So I'm going to create a new version, and we'll call this interest code quarterly. This is going to be a multiple rate interest code. The first interest code that we create is going to be effective from 1/1 until the end of the first quarter, or 3/31. We're going to calculate interest every 3 months. Again, quarterly interest. We'll enter our posting account. And in the first quarter of the year, we're going to calculate 1% interest. We're then going to create a new version of this interest code. So it's the same interest code, just a new version. Notice the effective date begins the day after the last expiration date, and this is going to be for quarter 2. So we're going to say that this expires on 6/30. We'll click Create. This is for 4/1 to 6/30, and in this quarter, we're going to calculate a 2% interest. We'll now create another version, effective 7/1 to 9/30, and we're going to have to click on to display all records, and I'll choose the third version. And in quarter 3, we're going to charge 3%. And we'll now do a new version, and this one will be quarter 4, which is from 10/1 to 12/31. When I choose that version of this interest code, we can see my dates appear, and in quarter 4, I'm going to charge 4% interest. So a couple things you'll notice that I did there is I kept clicking to create a new version. Also, since today is 6/8, you'll notice that I don't have an icon for this version of the interest code. This tells me this is the active or the current version of this code. And you'll see when I click on it, this one's effective from 4/1 to 6/30, which falls in the current time period. For ones that have passed, you'll see I have an icon with a green arrow pointing back. And for ones that are in the future, you'll see that I have the blue arrow pointing forward. If I close the form and I come back into the form, again, by default, we see only the current records. So we can see that I have a quarterly interest rate, and the only one that shows is the 2% for quarter 2 from 4/1 to 6/30. If I want to see all of them, I can click on Display All Records, Apply, and here I've got my 4 versions of the quarterly interest code. Quarter 1 is 1%. Quarter 2 from 4/1 to 6/30 is 2%. Quarter 3 from 7/1 to 9/30 is 3%. And quarter 4 from 10/1 to 12/31 is 4%. Just like in my last example, what I'll do is I'll create a new customer. So 902315 belongs to customer group 10. And if we take a look at the customer record, we see that they have terms of payment of net 30. What I'll then do is I'm going to go and I'm going to create on my accounts receivable, on the customer posting profiles, I'll create a record specifically for 902315. And I'm doing this way just to show the transactions and setting up that interest code. Typically, I think we'd see customers use this where they set them up for groups. You very well may set them up for a specific customer, but you may have certain groups of customers that use the same interest codes, so you could do it that way as well. And the interest code that I'm going to apply to this customer is my quarterly interest code. I'll close this form. what I'm going to do next is I'm going to create a free text invoice in quarter one. So we'll say that this invoice was on 1/1 with terms of payment of net 30. It would be due at the end of January. This is a $1,000 invoice. We'll go ahead and post this. Once posted, I'm going to run an interest calculation. So if we go back to the accounts receivable area page, under periodic collections, interest calculation, I'm going to change my customer to 315. And what we'll do is we'll run this just to the end of the quarter. So that invoice should have been due at the end of January. So we're going to run interest just for quarter one. We'll click OK. We've created an interest note. Now we'll go take a look at it. We can see here it's created. And if we click on transactions, we can see it was created for $10 or 1% of our $1,000 invoice. So here we see that we have 1% of interest for quarter one. Now what we're going to do is close this form, and we're going to run another interest calculation for this customer. This time we're going to run it to 12/31, to the end of the year. Choose my customer, which is in there, and we'll click OK. We can see that it canceled the first interest note since I didn't post or print it, created a new one, and if we go to look at that new interest note, we can see here's the new one that was created, and here are the transactions. So for quarter one, we have 1% or $10. It's still outstanding in quarter two. We have 2% or $20. Quarter three, we have 3% or $30. In quarter four, we've got 4% or $40. The last example I want to show is talking about interest ranges. If we go and create a new interest code under Accounts Receivable, Setup, Collections, Interest. Here we're going to create a new interest code, and we'll call this interest code range. This is a single interest rate. We're going to calculate interest every month. We'll enter our posting account. Interest by range, we're going to enter interest by amount ranges. So for certain amounts outstanding, we're going to charge certain rates. And the interest will be based on a percentage. In order to get the values in the fields in the bottom portion of this form available, we need to add a record, and what it's for our currency that we'll be using. By choosing an interest range, the ranges button becomes available. We'll click that to open the customer interest range form. Here on this range, we're going to enter our ranges. So from 0, we're going to calculate 1%. So anything from 0 up until value 499. So the next range will begin at 500. So anything over 500 will be at 2%, and that'll go up until $999. So at 1,000, we're going to charge 3%, and that'll go to $9,999. And anything over $10,000 outstanding, we're going to charge a 4% interest on. We'll go ahead and close this. We'll save this record and close this form. And again, we'll go back and create a new customer. So here we have customer 902316. Belongs to customer group 10. We'll edit this customer record to be net 30 and close the customer form. On the first of the year, we're going to enter a free text invoice. So we'll create a new free text invoice for customer 902316. and that's dated 1/1. This invoice is for $300. Again, we're doing interest ranges. So this will fall into the $0 to $499 range, so it should be calculated at 1%. We'll go ahead and post this invoice. Once posted, we'll go calculate interest for this customer. And one thing that I did forget to do is if we go back to the accounts receivable area page and go to our customer posting profiles, we need to create a record for customer 902316. And we'll do the interest code of range. So now we're going to go to our interest calculation. We'll choose our customer of 902316, and we're going to run our interest calculation. This was entered on 1/1 with net 30, so we'll run our interest calculation, let's say at February. So on 2/28, we'll run our interest calculation. I'm going to start that over. I didn't have the interest term set up right away. Shoot. All right, here we go. So we have our customer 902316. We then need to go to our customer posting profiles. And for our general posting profile, make sure that we have a record entered for this customer. And we have this customer set up to use the interest code of 902316, uses the interest code of range. Once that's set up, we're going to enter a free text invoice for this customer. So we'll go to the common area and accounts receivable, all free text invoices. Create a new free text invoice for this customer, 902316. And this will be dated 1/1. This invoice is going to be for $300. If you recall back to our ranges, that'll fall in the range of $0 to $499 at 1% interest. So I'm going to post this free text invoice. Once posted, we'll go back to our area page, and in the periodic section, interest calculation. Here we're going to mark our invoice. We'll choose our customer account to just run it for this one customer. And we're going to run it through February. So we've got our customer created. The next thing we need to do is go to our customer posting profiles, and we need to make sure to add a record for this customer 902316. And we're going to choose the interest code of range. Now we're going to enter a free text invoice for this customer. So for customer 902316, dated 1/1. This free text invoice will be for $300. And going back to our ranges, that'll fall within the lowest range from $0 to $499 at 1%. I'm going to go ahead and post this free text invoice. Once posted, I'm going to go back to my area page, and in the periodic section, interest calculation. We're going to run our interest to the end of February. I'm going to make sure to select my customer and click OK. I'm going to go back to where I posted that first invoice and just create another one and run them, so we'll have to edit some of that out. So now we have our first invoice of $300 posted. What we're going to also do is create another free text invoice for the same customer. So customer 902316. This one will be dated 1/1. And this invoice will be for $5,000. So this invoice will fall into third bucket of $9,999 at 3% interest. I'm going to go ahead and post this transaction. Once these two are posted, we'll go back to our area page. And in the periodic section, we're going to go to interest calculation. And we'll run our interest calculation to the end of March for our specific customer. Click OK. And when we look at the interest note, click on the Transactions tab, we can see that we have two transactions. One transaction is for our $300 invoice. This was at 1% interest, so $3 monthly, and it's 2 months overdue, so we get a total interest of $6. Our $5,000 invoice was at 3% interest, and again, this is 2 months overdue, so it calculated $150 for each month overdue, or $300 for our second invoice. That'll conclude the demo and the examples for today. I'd like to thank you for joining me in Microsoft Dynamics AX 2012 Financials New Features Interest Calculation. Thank you.
This module shows new features in Accounts Receivable. My name is Helge Arntzen. I'm a Senior Support Engineer focusing on the finance area of Microsoft Dynamics AX 2012. We will look into the following topics: Customer Payment Journals list page, recurring free text invoices, customer reimbursement address, multiple invoice formats, centralized customer payments, Customer Payment Journals list page. In this lesson, you will learn that there have been added new features in the Customer Payment Journals list page. Here you see the Customer Payment Journals list page, and this is found in Accounts Receivable under Common. New features were added in this view, and that is Refresh button is new. So you can click on this button instead of having to reopen the payment journals to get the refresh. Status field is new. Here we can select between all, open, and posted. And this allows you to quickly filter the list. At the bottom of this view, you find the preview field, and the preview shows the first 10 journal lines. This might save you some time when you are searching for a specific payment journal, because you do not have to click on the lines button each time on each journal to see some of the content. The user might want to know which queue and on which date workflow work items were assigned to them. For this reason, 2 new workflow columns were added to the payment journals list page, and that is the queue column and the column assigned to queue. The user might want to easily identify which payment journals are assigned to me as a workflow work item. To support this, 2 new secondary list pages were added to the menu. That is basically the same view as you see now, except that they show payment journals assigned to me or assigned to my queues. The user is allowed to take workflow actions in this view. That means to report as ready, to approve, or to reject. In this lesson, you will learn how to let a customer be invoiced recurring free text invoices periodically. For example, monthly office rental or other monthly fees. There is a recurring subscription feature for sales order invoices, but that requires an item number. Free text invoice does not require an item number. The recurring free text invoice feature contains the following steps. First, you create a template where you define everything as on a normal free text invoice, except you do not define the date and the customer. On each customer, you define a schedule with start date, end date, and the number of days, weeks, months, years between each invoice. For example, each second month, instead of using an end date, you can set that the invoicing should stop when you have reached a specific cumulative amount. The invoices are created in two steps. First, you generate all recurring invoices for this period, and then you post the invoices. Let's have a look at this in Microsoft Dynamics AX 2012. You go under Common and select all customers, then you select a specific customer. You go to the Invoice tab and select Recurring Invoices. Let's click on the New button. The first step is to select a template. So let's have a look at the templates that already exist in my example. I right click and go to View Details. So now I want to see this template, and here you see the template for office rental medium size. This is almost like a free text invoice, except that it does not contain the customer and the date. So here you see the text and the account and the amount, 2000. So this is the template. So now I'm going to use this template on my customer 1303, and I want this to start on the date of 11th of May, and I select end date. I want this to be repeated every month for the rest of the year, so I select December 2011 on date, and I want this to be repeated monthly every 1 month. So if I wanted every second month, I should type 2 here, but I want it to be invoiced every month, so I type 1. I could also select that it should stop invoicing when I have reached a specific cumulative amount, and that is entered here. But now I want this to be invoiced the rest of the year. So the last invoice will be 11th of December 2011. So I save this. I also want this template to be used on another customer. So I have 2 customers that are renting offices from me. So I click on the recurring invoice and I click on new, and I select the same template, rent office. That means they will be invoiced 2000 every month. So I want this to start now and for the rest of the year. So I select December. And it should be invoiced every month. So I type 1 month here. So now I'm ready. So to create the invoices, I do that in 2 steps, and that is found on the periodic. You find generate and then post. So let's start with generate recurring invoices. I want this to be invoice date 11 May, and I select the template, rent office. So let's run this, and now it created recurring invoice. So the next step is to post the invoices. So I go to post recurring invoices, and now I see that it has generated this recurrence ID. And when I click on the lines button, I will see that it has created 1 invoice for customer 1303 and customer 1103 with the amount 2000. So now I can post and transfer these 2 invoices. and this was for 11 of May 2011. There it was posted. I close and I go to recurring invoices and I go to history, and notice it has created invoice on customer. See, it has created invoice dated 11 of May, and if I click on the details, I see that this is customer 1103. To see a list of all the invoices that were generated and posted, you can go to all free text invoices, and here you see the recurrence ID. So if you want to see only those invoices with that recurrence ID, you can right click and filter by field. Now I see those two invoices that were generated and posted. If we go back to the template, this is found in the setup free text invoice templates. We select our rent office and you see the amount 2000. There is a feature named distribute amounts. So when I click on this button, you are allowed to split the amount on several accounts or dimensions. For example, we can say that 30% should be posted on this account, while the remaining 70% should be posted on that account. So that is the distribution feature. You can anytime change the amount. So let's say we change to 2,200. This is useful, for example, if the price has changed the next year. The new amount will be used on the next invoices that are generated. And if we click on the distribute amounts now, you will notice that the amounts are automatically reflecting the new amount, 2,200. If you, by mistake, run the general recurring invoices twice on the same period, it does not matter, because the invoice will be created only once for each scheduled occurrence. Generate recurring invoices will generate invoice only if it has not been created before. Therefore, if you forget to run generate recurring invoices on April month and you run this on May month, it will create two invoices if you have set it up to create one invoice each month. So it does not matter if you forget to run it, because it knows which invoices to create. But on this generate recurring invoices form, you can also set this up to be run as a batch. So if I click on recurrence button, I can set this, for example, up to run on day 25 in each month and no end date. And maybe this should be run in the middle of the night, for example at 2 o'clock in the middle of the night. This is possible by using the batch feature. To get an overview of the invoices created by using recurring invoices, there are some alternatives. To see a list of all the invoices that were generated by one specific recurring invoice, you can go to the post recurring invoices.
Hello, this is Jeremy Tandeschi, a Senior Support Engineer with Microsoft Dynamics AX Support. Today we're going to take a look at Microsoft Dynamics AX 2012, some financial new features, accounts receivable and accounts payable settlements. In this module we're going to learn some of the new functionality surrounding accounts receivable and accounts payable settlements and cash discounts. The first lesson, new parameters and fields. In this lesson, we're going to explain the new parameters that were introduced with accounts receivable and accounts payable settlements and cash discounts. Although this is a feature to Microsoft Dynamics AX 2012, this was also backported to Microsoft Dynamics AX 2009 Service Pack 1 Rollup 5. There's two new parameters that we'll see. One is calculate cash discounts for partial payments. In previous versions of Dynamics AX, you would take a cash discount only when the invoice was fully paid or fully settled. Now you are able to take a partial discount when the invoice is partially paid. There's also an option to calculate cash discounts for credit notes. We can take a discount or reduce the amount that a credit note is worth when applied to an invoice. The Open Transaction Editing form also has new fields, settlement posting date, and date used for calculating cash discounts. We'll see those as we go through the demo and look at some transactions. If we look in Microsoft Dynamics AX 2012, in Accounts Payable, Setup, Accounts Payable Parameters. Here on the Settlement tab, you'll see the two new parameters, Calculate Cash Discounts for Partial Payments and Calculate Cash Discounts for Credit Notes. Likewise, on the Accounts Receivable side, if we go to Accounts Receivable, Setup, Accounts Receivable Parameters, and choose the Settlement option. Here we will see our two new parameters, Calculate Cash Discounts for Partial Payments and Calculate Cash Discounts for Credit Notes. Lesson 2 is Partial Discount Calculation. In Lesson 2, we'll learn how discounts are calculated when doing partial settlements. Consider this example. We offer a 1% discount. We have an invoice for $1,000. When this invoice is fully settled, there will be $10 total discount, assuming that it is settled within the cash discount period. If we want to pay half of the invoice, so we're going to pay $500, we'll take the amount of the payment divided by the amount of the invoice that we're going to be paying times the discount amount. For example, if a customer remits a $500 payment, we divide that by 99 or 0.99, 99% to get $505.05. That calculation alone will give us the total payment, our $500 and a $5.05 discount. To find the discount amount, we take that times 1%, which is our discount amount, and we get $5.05. So a $5.05 discount plus our initial $500 payment will result in a $505.05 settlement. If we want to pay exactly half, including the discount, the customer can remit $495. If we use that value in our calculation, $495 divided by our 99% that we are paying equals $500. That is our total payment. If we multiply that times our 1% discount, we see a $5 discount. So that would result in a $495 settlement, a $5 discount, and a total settlement of $500. Lesson 3 is settlement and discount examples. In this lesson, we're going to go through some examples of settlements and discount calculations. We'll take a look at partial settlements. We'll show a discount on credit note, and we'll also show tiered discounts. For this example, I'm going to create a new customer. This customer will then not have any history. So we'll create customer 902-307. Add that customer to customer group 10. I'm going to then save and open the customer form. When I save and open this form, by default, I'm in view mode. Here I can see some details on this customer. In order to edit this customer, I need to click the pencil icon at the bottom of the form or the edit button at the top of the form. By clicking that button, I can now click on the different fast tabs and edit details. If I look at payment defaults, I can see that the terms of payment for this customer are net 30. I'm going to also add a cash discount of 1% in 10 days. So we're going to offer this customer a 1% discount if paid in 10 days. Close and save this form. What we'll then do is we will add a free text invoice for this customer. So we will create a new free text invoice for customer 902-307. And to keep our date simple, we'll choose the first of the month. Invoice number 1. We'll choose our account. And this invoice is for $1,000. By clicking the totals button at the top of the form, I can see the totals. It's a $1,000 invoice. There are no discounts, no total discounts, no sales tax. We have an invoice amount of $1,000 and a cash discount available of $10. Close the totals form. And what we'll now do is we'll post this invoice by clicking the post button at the top of the form. Once that's posted, we'll very quickly go to this customer. So if I go back to the area page and click on all customers, and here we have our customer 902307. I can click on my transactions button at the top of the form, and I can see that there's an invoice for $1,000. To pay this invoice, there's a few ways that I can do this. Back to my area page, if I go in the journal section to payments, payment journal. Here I create a new payment journal. And I can click the Enter Customer Payments option at the top of the form. The invoice was dated 6/1 with a 1% discount in 10 days. So if I pay it on 6/7, I'm within that discount period. So I'll choose my customer. When I choose my customer, I'll see my transactions appear at the bottom of the form. Going back to the example that we had in the slides, if this customer remits a payment of $500 and I mark the invoice, I'll expand this form so we can see more of it. By default, you'll see the amount to pay will show the total. So it was a $1,000 invoice with a 1% cash discount, or $10, so the amount to pay by default shows $990. As the customer is remitting $500, we change the amount to pay to show $500. When I tab off, we can see that the discount amount to take then updates to $5.05. Again, if we wanted to settle with the payment including the discount of an even $500, we can change this to $495 payment. And when I tab off and I mark the amount to pay on this invoice of $495, the discount amount to take updates to $5. I can then click Save and Journal, close the form, and I've got my journal. If I want to verify, I can look at the lines. I see I have a payment of $495. I'm going to go ahead and post this. And once posted, we'll take a look at this customer's transactions. So if I go back to my all customers and 902307, if I click on transactions, here I can see that I have a $1,000 invoice. It has a $500 balance. I've settled for, I have a $495 payment, a $5 cash discount, so I've settled a total of $500. If we then want to pay the second half, the remainder of this invoice, I'll again go back to my payment journal. I'll create a new payment journal. And this time, instead of clicking Enter Customer Payments, I'm going to click the Lines option. And we will say that on 6/9, so 2 days later, they're going to pay the remainder. I'll choose my customer account. From here, what I'll then do is click on Functions, Settlement. This will take me into the Settle Open Transactions form. Here I can see the open transactions for this customer. I see that I've got an invoice dated 6/1. The amount remaining is $500. The amount to settle is $495. The reason it's $495 is that my payment date is within the cash discount period. There's a $500 amount remaining on this invoice, but there's also a $5 discount eligible. If we look at the bottom left of the form, we can see the discount on this invoice is $10. The discount taken is $5, and the discount amount to take is also $5. If I mark the invoice to pay the remainder, I close the form. A payment is created for me for $495. I'll then post this payment. And we'll go take a look at this customer's transactions. If we click the Transactions button, here we see we have our $1,000 invoice. We have our first payment on 6/7 for $495, my cash discount for $5 that relates to the first payment. We have our second payment on 6/9 for $495, and we have our second cash discount of $5 that relates to the second payment on 6/9. Another example that I'd like to show, we'll create a new customer. $902,308. We'll create this customer with the same information, so it belongs to customer group 10. We'll quickly save and open this customer form. We'll edit this form, edit the customer record, and we'll give this customer a cash discount of 1% in 10 days. We'll go back to our area page, and we'll go to Free Text Invoices. We'll create a new free text invoice for $902,308 using the same date of 6/1. And this invoice will be again for $1,000. I'll go ahead and post my invoice. Now what I want to do is I'm going to go in and I'm going to go back to the area page. I'm going to create a payment journal for this customer. And in the last example, we settled this payment to an invoice. Instead of settling it to an invoice, what I'll do is just create and post the payment. So the payment is not yet settled to an invoice. By default, my date is today's date, or 6/7. Choose the customer, 902,308. We'll do a payment of $495 because we know that we're going to take a $5 discount to settle a total of $500. But instead of settling it, I'm just going to post this payment. Once posted, now let's take a look at this customer's transactions. In looking at this customer's transactions, here we can see we have an invoice for $1,000 with a balance of $1,000, a payment of $495, and a balance of $495, so nothing has been settled. I'll close this form, and on this customer, I'm going to go to the Collect tab, Settle Open Transactions. So this again takes me into the Open Transaction Editing form. Here I can see my open invoice and my open payment. I'll mark the invoice and the payment to settle to one another. Again, by default, we see that the invoice shows $1,000, and we're going to settle $990 by default because we have a $10 discount available. Our payment, however, is for $495, so we're going to update this to show $495 that we are settling with this transaction. By doing that, we see at the bottom of the form the total discount is $10. The discount amount to take shows $5. Earlier we talked about a couple new fields as well. Here in this form, you'll see that there's a settlement posting date. So we can choose the date that we're going to use to settle these transactions. We can also choose the date used for calculating cash discounts. Typically would be the transaction date, but we can also choose selected date and manually enter a date. So for example, if our payment was outside of the discount period, but we wanted to settle it using and take the discount, we could enter a date. What I'll do is I'll keep this set to transaction date as it defaulted, and then we'll post the second payment using a different date. So with these two transactions marked, the appropriate amount entered in the amount to settle field, in the upper left corner of this form, I will click the update button, and it'll update and settle those two transactions to one another. Now you'll see I've got my invoice for $1,000 with $500 remaining and $495 amount to settle if we pay that within the discount period. Now what I'm going to do is go back to the area page, go back to the journal section, and create another payment journal. I'm going to go to lines, and on this payment, I'm going to enter the date of 6/15. 902-308 is my customer. And we're going to enter an amount of $495. This payment's going to be after the discount period. So in theory, we should be paying $500. But if the customer remits an amount of $495, I'm going to post this payment. Again, I'm not settling it to anything at this point. And if I go back to the customer form, I'll choose my customer, and we can see our transactions. So I've got my initial invoice of $1,000, a balance of $500. I've got my first payment of $495. We took a discount of $5, and now I've got an open payment of $495, and it still has the remaining balance of $495. I'm going to close this form, and we're going to click the Collect tab and Settle Open Transactions. Here I'm going to mark my invoice. I'm going to mark my payment. Here you can see that the amount on the invoice shows $500. It shows that we're going to settle $495, and that's the amount of my payment. But you'll notice the customer still has a balance of $5. The reason for that is that this payment is outside of the discount date of 6/10. You'll also notice on the bottom, because this is after the discount date, my discount amount and discount amount to take shows 0. The second example I want to show you is I'm going to create a new customer. And this customer will be 902-309. We'll give this customer the same customer group, 10, as our previous customer. I'm going to save and open this customer. And we'll edit this customer record. And this customer also has terms of payment net 30 and a cash discount of 1% in 10 days. Close this form, and I'm going to enter a new free text invoice. This is for customer 902-309, and we'll use the first of the month. And this invoice will be for $1,000. Let's go ahead and post that invoice. Now what we're going to do is we're going to create a payment journal. So in the journals, payments, payment journal, we'll create a new payment journal for our customer 902-309 on 6/7. We'll create this for $495 because we know that if we pay half, or we pay $495 and take a half of our $10 discount, or $5, we'll have a total settlement of $500. In our last example, we marked this payment to the invoice, settled them, and updated and posted the transactions. Instead of settling it right now, what I'm going to do is just post this payment. Now that it's posted, we'll go take a look at this customer record. So 902-309, and if we look at the transactions, here we have an open invoice for $1,000 with a balance of $1,000. We've got a payment for $495 and the full balance of $495. It hasn't been applied or settled to anything. If I close this form and I click the Collect tab, here I'll click Settle Open Transactions. Here I can mark my invoice and my payment. You'll notice the invoice shows $1,000, and by default the amount to settle will show us $990. This is our $1,000 less our $10 discount because we are in our discount period as of 6/7. This payment is only $495, so I'm going to enter $495 as the amount to settle. You'll notice on the bottom left of the form we see our discount is $10 and our discount amount to take is $5, or half of our discount. We're going to go ahead and in the upper left hand corner we'll click Update to settle the payment to the invoice. Now you'll see we have the invoice of $500 remaining and the amount to settle is $495. We took, in the bottom left corner, you'll see we've taken a discount of $5. The total was $10, and we have a discount amount to take remaining of $5. What we'll now do is change our system date to a date that's after the discount period. So we'll say the 15th. We're going to go back and create another payment for this customer. So we'll create a new payment journal. Click on the lines. So on 6/15, and we'll say they sent us another $495. So we're after the discount period, but they remitted $495 and believe that they're going to take another $5 discount. So what I'm going to do is post this payment. Again, we have not settled this payment to an invoice. We'll go and verify that by looking at the customer. And on the transactions, here we see we have our $1,000 invoice. It's got a $500 balance. We've got a $495 payment, a $5 discount. These have a $0 balance. And our last payment of $495 has a balance of $495 remaining. If I close this form and we click the Collect tab, Settle Open Transactions, here you'll notice with our invoice selected, we've got $500 and a $500 amount to settle, where before the amount to settle was showing the full amount minus the cash discount. If we look in the bottom left corner, we see the discount taken is $5, but the discount amount is 0 and there's $0 discount to take because we are, again, after that discount period. In order to see this information, we must be sure that at the top of the form we're highlighted on our invoice. What I'm going to do is mark my invoice and mark my payment to settle to one another. If I settle this and I click the update at this time, this invoice will have $5 remaining to be paid. A couple of things that I can do is if we're going to allow the customer just to take this discount, in the bottom left, I can change this use cash discount and change it from normal to always. With my invoice selected, here you can see that the customer has a $5 balance remaining. In the bottom left corner, the discount taken shows 5. The discount amount shows 0 and the amount to take shows 0 because we're after our discount period. With the invoice highlighted, if I set this to always, because we're going to let them take that $5 discount, They remitted $495 less our $5 discount, and we're going to okay that for them to take it. By changing that to always, now we can see our discount amount here shows 10. It shows that we've taken 5, and the amount that we're about to take on this transaction is 5 as well. The amount to settle in the upper right-hand corner shows $495. What I'm going to do is set this back to normal. You'll see it's again going to go back to our $500, and we're not going to take a discount here. We talked about a couple other fields earlier. There's a date to use for calculating discounts. By default, this will be set to transaction date. Another option I can do is choose selected date. By choosing selected date, it'll default with today's date. But let's say we change that to the 7th, which is within our discount period. Here again, you'll see that our transaction now shows $495 to settle. Again, we're highlighted on the invoice record. In the bottom left-hand corner, we have a discount amount of 10. We've taken 5, and we're going to take 5 again. I can go ahead and click Update, and now my transactions are removed from this form. If I close that form and go back to the Customer tab and click on Transactions, you can see that I've got 2 payments for $495, and I did take 2 discounts on each, a discount on each for 5, or a total of $10 discount. So you can see that there's a couple ways that we can take a discount even after the discount period. One is by setting that use discount to always, or we can use that selected date to calculate our cash discounts. Another example I'd like to show is we'll create a new customer, 902-310. This customer is going to belong to the same customer group. I'm going to save and open the form because we've got to add a cash discount to this customer. So we're going to add 1% in 10 days. I'm going to close the customer form. We're going to go ahead and enter a free text invoice for this customer. Just like we've done in the previous examples. So on 6/1, we're going to enter a $1,000 invoice. I'm going to go ahead and post. I'll post this invoice. And what we're going to also do is we're going to create a credit. So for 902-310, and we'll use 6/1. We'll call this credit 1. So we'll create a credit for $200. I'm going to go ahead and post that. Close these forms. What I also need to do is under Accounts Receivable, set up Accounts Receivable parameters. Under my Settlement tab, we're going to verify, which it wasn't marked, we're going to mark Calculate Cash Discounts for Credit Notes. If I then go back to this customer, I'll click on Transactions. I can see I've got a $1,000 invoice and a $200 credit. If I go into the Collect tab and we're going to settle our credit to our invoice, I'll mark my invoice, mark my credit note. All right, starting that last example over again. Another example that I'd like to go through is calculating cash discounts on credit notes. If we go back to our area page to set up Accounts Receivable parameters, in the settlement option, we talked about calculating cash discounts for credit notes. We're going to mark that option, and we're going to also go to set our system date back to today's date. I'm going to create a new customer. So this is customer 902311. This customer belongs to customer group 10, and we're going to save and open the customer form and click edit mode so we can add a cash discount of 1% in 10 days. We'll close the form. I will then go and enter a free text invoice for 902311, and we'll use 61. We'll enter an invoice for $1,000, and we'll go ahead and post this invoice. What I'm going to also do is enter a credit of $200. So for customer 902311, and we'll do that as well on 6/1. And we'll enter it for the amount of $200 or negative 200. Go ahead and post this. If I go back to my customer form and we look at customer 902311 and click on transactions, here we can see they're not settled against one another, but we have an amount or an invoice for 1,000 and a credit for 200. I can now click on the collect tab and back where we were before, the settle open transactions. Here I can mark my invoice, mark my credit. Here we'll see that the amount to settle for the credit is $198. This is a $200 credit note. We have 1% discount, so we're taking a $2 discount on this credit note. We're going to then settle 198 of that to our invoice, and you'll see with the invoice highlighted, we've got a total discount amount of 10. We haven't taken anything yet, but by settling 198, we're going to take a $2 discount on the invoice as well. If I go ahead and click update, you can see I've got an invoice with $800 remaining, so $200 is settled. We'll go ahead and close this form, go back to the customer tab, click on transactions, and here we can see we've got our $1,000 invoice, a balance of $800. We've got our $200 credit. Here we've got our discount, and this discount applies to 10033, which is our invoice, and the bottom discount applies to our credit note of 100001. So by marking that calculate cash discounts on credit note option, we entered a $200 credit note, but we took a 1% discount on that credit note. By settling that to our invoice, we actually settled $198 of this $1,000 invoice, which took also a $2 discount, which leaves us with the remaining balance of $800. The final option I'd like to show is tiered discounts. If I go back to the area page, if we go into accounts receivable, setup, payment, cash discounts. What I've done is I've set up a discount of 5% if paid in 10 days. If we look over on the next discount code, we see 1% in 20 days. So here, if they pay it in 10 days, we're going to offer a 5% discount. And then from days 11 through 20, or if they pay it in that second tier, they'll get a 1% discount. I'm going to go ahead and close this form. We'll create a new customer. $902,312. I'm going to open so I can edit this customer record. And on this customer record, we're going to set the cash discount of 5% in 10 days. And again, this had a tiered discount of 1% in 20 days. So we'll go ahead and close this record, and we'll go back, and I'm going to enter a free text invoice, and we'll enter this on 6/1. We'll enter our same invoice for $1,000, and I'm going to post this invoice. I'm going to go back and create a payment journal. The payment journal will be for our same customer. Click on lines, and we'll enter the first payment on 6/7. So we are within the first discount period, which is a 5% discount, which is a total of $50. I'm going to enter my customer, and I'm going to click on Functions, Settlement. I'm going to create a payment that's going to be settled to this invoice. And notice if I leave this and don't change anything, I'll be creating a $950 payment. In the bottom left, we can see that the discount amount to take is $50, and the discount amount I would be taking here is $50. Instead, we're going to pay half, so we're going to take a $25 discount, which is going to result in an amount to settle of $475. By doing that, in the bottom left, we'll see that the discount amount to take is updated to $25. I'll go ahead and close this form. I've got a payment of $475, and I'm going to go ahead and post that payment. Once posted, let's go ahead and just take a look at this customer's transactions. So here we can see we've got a $1,000 invoice. It's got a balance of $500. The reason is we took a $475 payment and we paid it within the first discount period, which was a 5% discount. So we took a $25 discount. That first discount period was 10 days. So now what I'm going to do is we'll go ahead and change our date to 6/17. So we're in the second discount period of 1%. I'll go back to payment journal, create a new payment journal, and we'll choose on 6/17, we'll choose our customer. And I'm going to click Functions, Settlement. Here when I mark this, we'll see it's $495. Here we can see that discount taken is $25. Now the discount amount shows $10 because we're in the second discount period. The second discount period was 1%, and 1% of our $1,000 invoice is $10. So if this invoice was fully settled in the second period, we would take a $10 discount. But because we're settling half of that, or $495, we'll be taking half of that eligible $10 discount, or $5. We can also click the Cash Discount tab up here, and we can see our cash discount periods. We can see that if settled by 6/11, the discount was 50. If settled by 6/21, the discount was 10, or 1%, and the net is due by 7/1, which is no discount and the total amount remaining of $500. So I'm going to go ahead with this marked, and I'm going to close this form, which will create a payment amount of $495. I'll go ahead and post this payment. And once posted, we'll go ahead and look at our customer transactions. So here we've got a $1,000 invoice. The balance remaining is $0. A $475 payment, a $25 discount that was taken, also a $495 payment with a $5 discount. When we total these up, we should get our $1,000. If we remember from the example, the total discount available was 5% if paid within the first discount period, or $50, and we took 25 plus 5 or $30 worth of that $50 discount because we paid it the first discount period and partially in the second discount period. And with that example, that'll conclude today's demo. I'd like to thank you for taking the time to view today's training on AX 2012 What's New, Accounts Receivable and Accounts Payable Settlements and Cash Discounts. Thank you.
The Partner Services offering is provided to members in the Microsoft Partner Network to ensure success throughout the business cycle. When you enroll, re-enroll, or qualify for an upgrade, you will receive advisory hours allocated to your organization based on membership competency level. With the new Microsoft Dynamics Partner Services plans available July 1, 2011, partners enrolling in the Advantage Plus plan will receive an additional 30 advisory hours. Advantage Plan subscribers will receive an additional 15 advisory hours. Advisory hours provide a single currency to use towards technical enablement and technical pre-sales and advisory services. For more information regarding what you can use advisory hours for, go to https://partner.microsoft.com, click the Support tab, and then click Technical Pre-sales and Advisory Services. If you have additional questions, contact askpts@microsoft.com or call 1-800-MPN-SOLVE. The Partner Services offering is provided to members in the Microsoft Partner Network to ensure success throughout the business cycle. When you enroll, re-enroll, or qualify for an upgrade, you will receive advisory hours allocated to your organization based on membership competency level. With the new Microsoft Dynamics Partner Services plans available July 1, 2011, partners enrolling in the Advantage Plus plan will receive an additional 30 advisory hours. Advantage Plan subscribers will receive an additional 15 advisory hours. Advisory hours provide a single currency to use towards technical enablement and technical pre-sales and advisory services. For more information regarding what you can use advisory hours for, go to https://partner.microsoft.com, click the Support tab, and then click Technical Pre-sales and Advisory Services. If you have additional questions, contact askpts@microsoft.com or call 1-800-MPN-SOLVE.